The parabolic stop and reverse (SAR) is a trend-following indicator that provides potential buy or sell signals based on the position of the price relative to the indicator. It's particularly useful for identifying points of potential trend reversals. The parabolic SAR is calculated based on the price movement and a specific formula that adjusts itself according to the trend's strength. It uses the acceleration factor, which increases as the trend develops. The parabolic SAR is plotted as a series of dots either above or below the price. When the dots are below the price, it indicates a bullish trend. When the dots are above the price, it indicates a bearish trend. By observing the position of the dots, traders can quickly identify the current trend direction. Dots below the price suggest an uptrend, while dots above suggest a downtrend. The parabolic SAR provides clear buy or sell signals. A buy signal occurs when the dots switch from above to below the price, indicating a potential reversal to an uptrend. A sell signal occurs when the dots switch from below to above the price, indicating a potential reversal to a downtrend. The parabolic SAR can also be used to set trailing stop-loss levels to protect profits. As the trend progresses, the dots follow the price closely, helping to lock in gains. Traders often use the parabolic SAR to determine optimal exit points from their trades. Suppose you're trading a stock that has been in a steady uptrend. You notice that the parabolic SAR dots have been plotting below the price, confirming the uptrend. If the dots switch to above the price, it could signal a potential trend reversal to the downside, prompting you to consider closing your long position or even opening a short position.